ascending and descending channels, and how do we recognize them in the market? So guys, one of the key things that I wanted to go over was ascending and descending channels, because when we look at the Forex market, okay, the market goes either up or down, okay? Now, by going up, we have an uptrend, and by going down, we have a downtrend, okay? Now, how do we know if these trends are starting to become exhausted and likely to not continue going in the same direction? And the key thing is by looking at price action. And this is the way that we do this, is by looking for ascending and descending channels. So for example, on a trend, I draw an example, a trend goes up, okay, we get a pullback, trend goes up, we get a pullback, trend goes up, we get a pullback. And that's how a trend works, okay? It goes up, pulls back, and it continues in this manner. And that's showing us that we are in an uptrend, okay? Now, a downtrend is the same. It comes down, we get a pullback, drops down, we get a pullback, drops down, pullback, drops down. And you can see that we break these most recent lows pretty impulsively, okay? That's telling us that we're on a downtrend. Now, how do we recognize whether markets are slowing down and momentum is not continuing? Well, what I do and what we look for in the guerrilla trading community is that once we get a nice impulse, okay, we get a pullback, we look at how we break this most recent high here. Because if we are looking for a trend, we expect it to impulsively break, okay? But if price comes up and then retraces, comes up and retraces, so we're breaking these highs and we're retracing, breaking the high and retracing. This is showing us that we've started with an impulse, we've got a continuation pattern, but as soon as we broke this most recent high, we've pulled back, giving us an ascending channel. Now, the reason why we have to look out for this in the market is when we get an ascending channel or a descending channel, we're likely to do the opposite to the direction we're going in. So for example, if we are going up, we expect a continuation. We expect it to continue going up with the trend. But as price comes up and starts breaking the high and retracing, breaking the high and retracing, breaking the high and retracing, with all the knowledge and experience that I have in the market, I know that majority of time when we have an ascending channel, price is likely to drop down, okay? So this is where we start managing our trades behind the most recent low, but we don't look to get into any trades when the market is ascending or descending, because this is a corrective nature period in the market, okay? So I'll show you an example also on a downtrend. It's the same. So as we are coming down, price is coming down, we get a pullback. We expect price to break this most recent low here impulsively for a trend, but it doesn't do that. It comes down and retraces, comes down and retraces, comes down and retraces, comes down and retraces. And this is just showing us that momentum is slowing down, okay? They're breaking these lows, but they're pulling back, breaking these lows, pulling back. So it's showing us that buyers are coming into the market and that are fighting against the sellers, and they want the market to go up, okay? And this is a key factor in price action we have to look out for, okay? Because this will really help us stay out of the market when the market is not impulsive, okay? So what I want to do now is I want to quickly run through the charts and show you what I'm looking at and replay the bars and how I'm looking live at how we can see that. Okay, so as you can see here, guys, that we've had this impulse break of the most recent low here, because this is the most recent high, that's the most recent low. We've had this impulse break, okay? Let me zoom in a bit for you guys. And you can see then that as price has then taken out this low here, taken out that most recent low, we go back up, find the most recent high and low within that trend, okay? Because the trend is now down. Okay, so then what we look for is we look at price action and we say, okay, this is looking quite impulsive, Okay, now are we going to get continuation of the impulse, or is price going to become corrective? Okay, so I'm going to show you live how I'm looking at it and explain what I'm looking at. Okay, next candle is carried on, so we're looking pretty impulsive. Okay, next candle as well has come down and looks pretty good. So what we're looking for now is we're looking to see whether we can get a nice counter trend move. Okay, and once we get a counter trend move, we want to see if price action gives us our setup or whether it continues to break the lows. And if it continues to break the lows, how are we breaking the lows? Okay, next candle is counter trend. Okay, now we want to see whether we'll get our setup, or as you can see on the very next candle, what has happened is price has gone up, come back down, and become a little bit exhausted, because as soon as we've taken out that low, it's popped back up. Okay, so now what we want to do is to see what happens on the next candle. Is it going to continue down impulsively, or will we get a retracement? Okay, because if we get a retracement, then what that is showing me is that price action is descending and more likely to go up than it is down. Okay, so let's look at the next bar. And as you can see, we've got a retracement. So as we broke this low here, we've got a retrace. Okay, so this would be, excuse me, this would be the new low. This would be the current high. Okay, because as you can see, price has come down, made that high, broke the low. That's the most recent high. Okay, so now what we do and what we focus on, we know that price action here is descending. Okay, so we don't want to get involved in this sort of price action, and this will help us stay out of corrections. Okay, when price is becoming corrective. So let me continue to play this and see what happens next. Okay, as you can see now, we slightly broke this high here. Okay, so we go backwards and find the most recent low, which would have been this candle. And then we see how we break this, because this is just broken. Okay, that would be the most recent high here, but we want to see how price is now breaking this high. Okay, so as you can see, price has broke. We've had a very small candle. Okay, very, very small candle. There's no momentum like these candles here. It's just showing us that price action at the moment is being very corrective. So we play on, and again, breaking that high and retracing. Okay, showing us that price action is becoming corrective. Okay, next one. As you can see, we're getting a bit of a move here, but again, these candles are very small. They're not large like these candles over here. Next one, again, it doesn't look very good. So we move our highs up. And what we're looking for, guys, is we're looking for a counter trend move, okay? Or we're looking for an impulsive move. But at the moment, you can see these candles are not very impulsive, okay? It's taken 1, 2, 3, 4, 5 candles, which is probably the same length as that one there, okay? So then we move on, and you can see now we've had this counter trend move, okay? Because it's not taking out this most recent high here. So as we move on, you can see we're having this counter trend move. And as you can see, price has now come down. Okay, now we've broken this most recent low, but what's happened, it's given us a wick, telling us that price is still not ready to go down. Okay, what's the next candle going to say? The next candle has done the same thing, dropped down, giving us a large wick. Okay, so these are now the lows. And all we're focusing on is price action. And what is price action telling us? Again, it's giving us a break of that low and pulled straight back up. Okay, we're not interested in this sort of price action because it's not giving us any real momentum to the downside. Okay, and as you can see now, we have this counter trend move. Okay, we'll have a look. And as you can see, price is now pulling back up. And again, we've just taken out this most recent high. But how are we taking it out? Well, straight away, we've seen this candle take out the high and pull back, okay? So this is giving us an indication that price action is going to go down, okay? Because it hasn't broken this high impulsively. Like I said at the beginning of the video, we look at how the highs and the lows are being broken. So I wouldn't be surprised whether we get a retrace candle here. As you can see, price straight away has retraced, showing us that the market is corrective. And this is a sort of period where we do not want to trade. Okay, so we keep going down. Again, this has just broken the low, but has it broken it with any force? Not really. We've just sort of pulled back. The next candle, as you can see, is blue. So we've broken this low and we've retraced. Again, corrective nature. Okay, so we'll keep playing this and see. Okay, so now we have broken this low here. Okay, this was the most recent low. So we've come up, we've made this high, made a little high, and then we broke the low and straight away given you a wick. Okay, now if we move this down to here, because that would be the most recent one. As you go backwards, that would have been the high that was the most recent. Okay, now what have I told you about wicks, guys? I've told you if you get a long wick like this, likeliness is that price will just range inside here. Okay, but what is happening is now price has come up, made this high, broke the low. What happens next? If we get a retracement candle, that is showing us again that price is descending and more likely to go up than it is down. Okay, there it is. Okay, so we've got now this retrace candle. As you can see, it's blue, it's come back up. So it's showing us now that the market is descending. Okay, more likely to go up than it is down. But just because it's more likely to go up than down doesn't mean that it's going to be impulsive. We could still get just a break of the high and a retrace, break of the high and a retrace. And this is what we need to focus on. Okay, so as you see here, guys, let's have a look what happens next. Again, we got this large wick, price action ranged inside it. Now what has happened now, guys? Price has dropped and it's retraced straight away. Again, showing us that price action at this moment is not willing to continue going down. Every time we're breaking lows, it wants to pull back up. Okay, so this is the new high. We've got this as the new low. And we want to see what happens next. Is price going to continue down or are we going to get a pullback up? And as you see, it's pulled back up. So again, showing us that we're still within this price action that is descending and that we want to go upwards. Okay. Next one. We broke this most recent high now. What's going to happen? Are we going to get impulsive or are we going to become corrective? And again, straight away pulled back, showing us that price is not ready to go up here. Okay, so as you can see here, this would have been the current high. Now, as we've come up here, we've made this little low and it's broken upwards. Okay, so I would have moved this up. And all we're doing, guys, is quite simply just following price action and letting price action show us whether it's impulsive or corrective. Okay, so as you can see, again, broken the lows, pulled back. We don't want to get involved in that market because if it becomes, again, look, it's just showing us that price action is coming down, breaking the lows and pulling back. We don't want to get involved. Okay, so let's continue with this. And as you can see, again, broken the highs, pulled back. Will we see a red candle or will we see momentum continue upwards? Again, we saw a counter trend bar, okay, showing us that momentum isn't continuing upwards just yet. And then you've seen this price action here, okay. This is the most recent high now because as you can see, we've broken, go backwards. This is the most recent low because it's a counter trend move, okay. And as you can see now, we're looking to see if we can get this impulsive move up. Okay, we saw this descending channel telling us that price action wants to go up, but we need to see some sort of impulsive move. Okay, and as you can see, straight after we break this high, we retrace right again. Okay, showing us that it's actually pretty corrective. Okay, so this would be the new high here, showing us that we don't really want to get involved in this market because it's gone up and it's broke straight back down, showing us that price action has no momentum to the upside. Now again, price has broken the high, retraced once again, showing us again that price action is not ready to go up. Okay, now this one, as you can see, has broken this high, so it's continued with that uptrend. Okay, so I leave my lows here. Okay, so as you can see now, we keep playing. What's going to happen? Again, we've just slightly broke that high. Okay, we'll put that there. Just slightly broke it. What's going to happen next? Are we going to get continuation up as an impulse, or are we going to just get a nice retracement again? And as you can see, it's broke the high and retraced. Okay, and this is what price action we have to look out for. Okay, we want to know that price action is taking out the highs, retracing, taking out the highs, retracing. Okay, what is that showing us? It's showing us we are ascending. Okay, breaking out these highs, we were retracing. Okay, breaking out these highs, retracing, breaking out these highs, retracing. Okay, showing us that price action is ascending and more likely to go down than it is up. So then all we do, guys, is just continue and looking at how the highs and the lows are breaking. So now that we've taken out this most recent high here, we want to move this one up, okay, because this is the most recent low. And then we want to see how the highs and lows are breaking. We do realize that obviously this is an ascending channel and that price is likely to drop. Okay, so let's see how we are breaking these highs and lows. Okay, so we see this large wick here. Price is likely to range within that. And all we're focusing on now is, are we breaking the highs or the lows impulsively? As you can see here now, we've dropped past this low. Okay, now are we going to get a retrace candle, or are we going to continue down with some momentum? And straight away again, it's pulled back, showing us that the market is corrective. Okay, we want to go back up, find the most recent high, which is here, and then we want to continue to see whether we're going to get a descending channel or whether we're going to get some momentum. Okay, we look at price action to see what happens next. Okay, so you can see we've now got some momentum. Now we want to see if we can continue with this momentum or whether we will get a retrace candle, because if we get a retrace candle, that's showing us that price is descending. Okay, now you can see we've had this momentum continue down, which is a good sign. But again, what is a telltale sign is this large wick. And when we get large wicks, price action normally ranges within that. And we don't want to get involved because we just get tagged in and tagged out. Okay, with my personal experience, I don't like taking price action with large wicks. Okay, so let's see what happens. Okay, so you can see now price is ranging within that area, which we expected because we had a large wick. Okay, so we need to keep focused on what's happening next. Okay, so now we're getting close to this low here. Are we going to break this low impulsively, or are we going to break it correctively? Okay, so let's have a look. Okay, so now we've broken this low. Okay, and what I like to do, guys, another thing that probably I do subconsciously, but also when we're inside this range here, in between the high and the low. Okay, now as price has broken this low here, we want to also look at what's happened within this range, because I can clearly see subconsciously that this is a descending channel. Okay, we broke these lows, we pulled back, broke these lows, likely to pull back. Okay, now I can see that, but obviously when I'm teaching you guys, when you have a range that breaks out of a low, like for example here, we want to also look at what the price action looks like within that range. And you can clearly state that this is a descending. So what I wouldn't be surprised with, and what I would actually expect, is to see a retrace here, okay? And then maybe come down and retrace, come down and retrace, okay? Showing us a descending channel, and it's more likely to go up, okay? Wouldn't be surprised at all, because of this price action prior is telling me that we're breaking lows, pulling back. Even though it's not, even though it's within our highs and lows, we still want to look at price action within that range. Okay, so let's see. And there it is, a pullback. Okay, so we've come down here. And now that we've broken this low, excuse me, I should have moved this before. Obviously, this would have been the most recent high here. Okay, and as you can see, we've just about touched it and give you a double top area. Okay, so you can see now that this descending nature, Okay, we're more likely to go up than down. Okay, so now that we broke this low, we need to move our lows down to here. Okay, and see now what happens next. Are we going to take out this high and retrace? Okay, or are we going to get some sort of impulse? Okay, so now we've taken out this most recent high. What's going to happen next? Are we going to get an impulsive move or a corrective move? Again, price is showing us that it has no momentum, showing us a large wick and that we're likely to go down than we are up. Okay, or we might get an impulsive break. And again, price broke the high, retraced. Okay, and it's just showing us, guys, that the momentum, there's no momentum in this market. There's no impulses. You can clearly state there's no impulses. Okay, and again, break the high, retrace. This is just showing us that price action is range bound and corrective, and we want to stay out of this sort of market. Okay, now we've broken this high, looks pretty impulsive, but what's going to happen next after this? Okay, this is the most recent low. Again, we've broken the high. What's going to happen next? Is it going to continue to impulse, or will we get a retracement candle? Because if we get a retracement candle, then it's showing us that momentum can't contain the upwards move. And you can see now that we're getting this move up, okay? And as you can see now, price is continuously pulling back, okay? And we want to look for, see whether we can get a move, because it's quite impulsive. We broke the most recent high pretty impulsively. So then we want to see whether we can get in on our counter trend move, okay? And also be aware that if we take out the higher retrace, again, we don't want to get involved in that market, okay? And as you can see now, price has come down, broke this low, okay? Now, if this was a bunker bomb, of course, we would want to get involved. That's the most recent low. We broke it and we've retraced. So I would get in here, okay? So that would get in long. And then what we look for, okay, we would have been in here. As it's come up, it's retraced, okay? Showing us that price action, again, is becoming corrective and that it might not want to continue upwards, okay? So then we look for our most recent lows. And we want to see now, is price action going to impulse up or is it going to become corrective? And as you can see, price action is still corrective. So if we were in this move here, of course, we would have moved our stops. And as we're breaking these highs correctively, we just want to be aware of the market that we do not want to scale in. If we are risk-free, we just want to continue up, okay? As you can see, again, price is breaking the highs and we're retracing, okay? And then we've got this counter trend move. And then again, price has just broke out of this high here. And then we look backwards. Where's the most recent low? Broke out the high. Okay, so we would have it either here or here, depending on how you're looking at it. That's the furthest low as we broke up, but you could also look at this one. But I think it's this one here, excuse me, that one here, because as you can see, it's a counter trend move, okay, and then we've gone up, okay. So it could be that one or it could be one of these. Okay, again, it doesn't really matter too much because you're only managing it. And all we're looking for here, guys, is to show you how we see a corrective market. Now, this high here has broken that high and retraced. Okay, so we don't want to get involved in any sort of scaling if we are in this position. Okay, so that's how the descending and ascending channel works and how we're looking at them, guys. Trends, the most recent high and lows, and how do we identify these on the charts? So with my vast experience in trading the Forex market, I've traded multiple different strategies, and I've come to the realization that most counter trend trading fails. So what we want to do at Guerrilla Trading is we want to trade with the trend, and we want to identify the most recent highs and lows, so then we know where we are on the trend and if the trend is changing. Okay, so a quick example on the chart to show you what I mean is if you think about a chart and a trend, okay? Now a trend comes down, makes a pullback, comes down, makes a pullback, comes down, makes a pullback, comes down. And then we go up, come down, shoots up, comes down, shoots up, comes down, shoots up. Now this is a trend down, and this is a trend up, okay? And the reason that we know it's a trend down and up is because we are identifying the most recent highs and lows. So as you can see, as prices come down here, it's made a low. Then we made a high, then we made another low. We made another high, made another low, made another high. Then we made a low, okay? Then this most recent high here has been broken, showing us that we've had a trend change. So then we've had a high, and we have a low, and we have a high, and we have a low, and we have a high, and we have a low. And this is how the Forex market works. It works on uptrends and downtrends, okay? So what we're doing at the Gorilla Trading is we want to identify how we look at the highs and lows, okay? And we do that on the charts. So what I'm going to do is quickly run through to you and show you how we look at the most recent highs and lows. Because when you have a trend that goes up, for example, and we get a nice pullback, goes up, pulls back, goes up, we want to identify these lows and these highs. Now, to identify a low, right, price has to break the most recent high. So we have this high here, we've had a counter trend move, and then once we break that high, it confirms to us that this is the most recent low. Then we break it again, we pull back, and as soon as we take out that recent high again, it confirms that this is the most recent low. Okay, so we want to identify these highs and these lows on our charts so that we know where we are, whether we're on an uptrend or a downtrend. Okay, so I'm going to show you this now on the replay bar, which will show you how we identify the most recent highs and lows. So currently you can see here that we have a low here, okay, and the most recent high will be when you go back and you'll see a high, a low, and a high. So this will be our most recent high there, okay? So you go backwards, find the most recent high. So as we go forward, you can see here that now price has changed. We were on a downtrend because price was breaking the lows, and now we've just broken that most recent high. So at this point, what we do is we move our highs to there, and we go backwards, and that will be the most recent low. So we won't need to move the low until we have a counter trend move. As you can see, price is still going up, so we just keep moving our highs. And as you can see here now, price has made a counter trend move, okay? And the easiest way of looking at this is if you look at the single candles and whether the previous high has been taken out. So on this candle, it was taken out. This candle was taken out, okay? And as we've come down, this candle here hasn't taken out this high, which means we have become counter trend, okay? But we can't confirm a low until we break this most recent high here. So as you can see now, this blue candle has taken out that high, okay? So now what we can do is we can go backwards and then back up, and we can see that this is the lowest point. So from that point, we move our lows here and we move our highs up, okay? So we're just moving the highs and lows so that we're following the trend, because currently the trend is up, okay? Made a low and then it's come back up. So we keep going. I'll show you candle by candle how we're doing this. So we move this again. This is another high. Next candle has broken the high. But as you can see now, the candle after this has come down, but it hasn't broken this candle here. The previous candle high was not taken out, which means the move is counter trend. Okay, so what we need next is for this high here to be taken out for us to confirm a low. Okay, let's play this forward. So this low here is not confirmed yet. until we break the highs. And as you can see, price now has dropped down even more. So it's great because it shows us that this is not the low anymore. It shows us that the most recent low is going to be lower if we take out this high. Okay, so this candle here now has just taken out the most recent high. So what we want to do is we want to go backwards to find the most recent low. And the most recent low will be here, because as you can see from this candle, it was counter trend, and then it's taken out the highs. Okay, so this candle we moved up here, and then we'll move this one down to the most recent low, which is there. Okay, and then we'll play on. And as you can see here, these candles have broken the previous high. The next candle has broken the previous high. So as the high of the candle, so you can see we just keep moving our highs up until we get a move that is counter trend and hasn't taken out the previous candle's high. So that one again has taken out the high, so we just keep moving them up. And then this candle here now has not taken out that high. So that's showing us that we've had a counter trend move. Okay, but we don't know that this is a low yet until we break this high, because this could do what the other one did. It could just drop down, okay, before taking out the high. So we don't know to move our stops or our lows up to there until we break the highs. Okay, so you can see here, this candle here has taken out the high. So this will be the new high here. And then we go backwards to find the most recent low, which would have been that little candle here. Okay, so you can see now we have the most recent low and the most recent high. And we do this so that we can take the most out of the market when we are trending. Okay, but we want to be able to understand when price is trending and when it is not. Okay, and it will help us to squeeze the most out of the market. And as you can see here, we're slightly taking out these lows. Okay, that is the most recent high. And as you can see, price now has dropped. Okay, so we just move our lows beneath that candle, and we just wait and see what price wants to do next. So now you can see price has taken out the highs again. So we move the high here. Where's the most recent low? Well, it's here. So all we do now is just move the highs and lows as we go forward. So that candle, you can see it's broken the high. Okay, so that will be our new high. And then we come backwards and we look for the most recent low. And the most recent low would be here, because as you can see, it didn't take out that previous candle, which means it was counter trend, and then it's taken out the highs. Okay, so we would move our low to there. Okay, and we just keep doing this up and down, moving our highs and our lows. Okay, and this will give us a good indication on whether we're on an uptrend or a downtrend. Now, I know some people will be wondering why this one here wouldn't be counted as a low right here, because it looks like it was counter trend. But if you look, the candle here, the previous candle was taken out by the high, which means we're still on that uptrend move. Okay, we're waiting for a candle that doesn't take out the candle before. So for example, as this one's come out, this candle here didn't take out the previous candle's high, which means we are counter trend. So that would be our low. Okay, now as you can see here, this next candle hasn't taken out the high either. It's become counter trend. So if we take out a high, this would be our new low. Okay. And as you can see, price is just pulling back, but the low hasn't been confirmed until we take out that high. And this is the thing that is great about this strategy and the way we're looking at highs and lows, because when price is just ranging like this, we know exactly where we are in the market. Unless we take out this low, we're still on an uptrend because the price has broken the most recent highs. And there you see it. It's just now taken out that high. Okay, so you can see the trend has continued upwards. Okay, and then what we do is we go back and find the most recent low, which is here. Okay, so we've come down and then we broke that high. So we look at that as our most recent low. So guys, this is how we look at the most recent highs and lows in guerrilla trading. Forecasting. Why is forecasting so important when we are trading? Well, if you think about anything, when we have ourselves prepared, the more prepared we are, the easier it is for us to pull the trigger, okay? And also it allows our subconscious mind to actually be ready for a trade to present itself. So for example, you may have back tested multiple different pairs. And as you know, all different pairs, they react differently to price action. So all different price action on different pairs are like speaking a different language. So this is why we highly recommend that you back test all different pairs and work out the personality of that pair. And then this will allow you and aid you to be able to forecast properly each pair. Because what that will allow you to do, after you've backtested so many different pairs, you will see certain characteristics on some pairs more than others. For example, the bullet, you might trade some pairs, and the bomb, you might trade some other pairs, because you know through your backtesting that it works out more on some pairs rather than others. Okay, so why do we forecast? Well, forecasting allows you to actually prepare your mind for trades that you are willing to get into. So when we look at the market, we look at the market in two ways, right? It's either moving impulsively or it's moving from descending and ascending channels, which depending on how many times we get an ascending and descending channels, it just creates a range. So we either move from ranges or from impulses, okay? And our two strategies allows us to get involved in both of those. So with forecasting, the reason I like to forecast, and I think it's very important, is also you don't hesitate. It allows you not to have any sort of hesitation when you see a trade set up. Now, why is that? Well, the reason is you've already forecasted that that scenario may play out. So when that scenario does play out, you don't have to second guess yourself. You just pull the trigger, and it helps you a lot more on your psychology. So let me quickly go through this now. So as you can see, guys, we have the euro US dollar here. And as you can see in current price, we've had this sort of nice push up, but we've had a larger wick. Now, with my own experience in price action, I know when you have a larger wick, we generally have a lot of range bound. Okay, so if we know it's likely to be range bound, we can then forecast it. So we can forecast that maybe the price will do this and then shoot up. Okay, reason I say that is because currently we are on an uptrend. So what I like to do is to look at what we're looking at currently and what is the highest probability from that stage. So I know here that we're more likely to range, okay, because I know that it ranges around a large wick, and then we could get a continuation pattern. Okay, also what could happen is that we know that we have a bullet scenario here, okay, and also a bomb scenario here. So what do I mean by that? Well, this goes down, pulls back, okay, we have one high, we have one low. Now we have a second high, but that isn't confirmed until we break this low. And if we break this low, we come down and go up, we have the two highs, the two lows, okay, which is a combination of the bullet. because it's a continuation pattern. It's a longer version. This is the bullet area. So we have a bullet/bomb scenario. And if that's the case, of course, I would want to get involved in that. So obviously, knowing that this is an area of interest, I would have forecasted that. So what I would do is I would say, right, what I think could happen is we could come down here, come back up, and then we could break this low and then go. Okay, so that will be one of my forecasts. Okay, also knowing what also could happen is that actually price action could just continue down. Okay, and keep coming down because it's starting to descend. So quite easily, price action could continue to descend. Okay, and then go up. So we just about break the lows, break the most recent high, and then we get a nice bunker bomb/bullet. And again, it's just about looking at all scenarios that you think could happen through your own experience of price action. Okay. Now, we know that we're with the trend. So what other scenarios can happen with the trend? Well, we are very concentrated on what happens at the most recent highs and lows. And currently, because we're on an uptrend, quite easily we could just break the high. Okay. Now, what is interesting is what happens after we break the high. Are we going to retrace and start ascending? Okay. We have to forecast that because it's very easily possible that once we break a high, we don't have to continue with the momentum. The momentum is coming up and it's pulling back down, coming up, pulling back down, coming up, pulling back down, showing us that the uptrend can't be continued and that we're more likely to drop than we are to go up. So if we know that, what are the two scenarios that we want to forecast? Okay, this is the most recent low. Well, the one we want to forecast first is if we go down and pull back to, which is the bullet, and then go. We forecasted that scenario. Then the next scenario would be if we impulsively break and then get a nice bunker bomb. Well, we know this is the two strategies, and we know that they are both very high probability from an ascending or descending nature. Okay, so that's one way we can look at it. And then we have to look at it the other way. What happens if price then comes down here? Okay, breaks the low. Oops, what happens then? Well, we've had a descending nature. Okay, what do we expect to happen? Well, we expect price to come up and break the most recent high. Now, what is the two scenarios we're looking at? Well, once we know we have this most recent high here, we're looking in to see whether it breaks up, pulls back to our level and goes, because we know that's the bullet entry. We know it's high probability. We know that if we have this descending nature, trend has changed down, but then we change back up because we break the high, and then we get a nice pullback to that level. We know it's a great bullet entry. Also, what could happen is price action could just shoot up, okay? And then it could give us a nice bunker bomb. We know again, just like the ascending nature, the descending nature can come out two ways. We either get a clear impulse or we can get a nice pullback to that area. And again, I'm only trading the Euro US dollar, the Aussie US dollar, and the Euro Japanese yen with the bullet personally. Okay, only reason is because I found them to be the most reliable pairs with the bullet. And it's not saying the bullet won't work on other pairs, but for me, I don't want to be sitting behind a computer all day. So obviously, when I'm not trading the US dollar, Japanese yen, or the other two pairs, I will only be doing forecasts for the bomb. Okay, so this is basically what we do in forecasting. It's basically showing you what could happen and what we think could happen going forward. And if we have all these scenarios down, then also we know that price action, once it happens, it can continue to do that. Now, also what could happen is price action could just give us a nice impulse down. Okay, and that's very possible. Because with us, we know that we're waiting for price action, right? So if price action gives us a nice shot down, gives us a nice big impulse down, we know what we're waiting for. We're waiting for a continuation bunker bomb. Okay, so this is how I look at forecasting, why I forecast, and it will really help you with your psychology. Hi everyone, how are you doing? Joshua Bunker here. So I wanted to go over journaling today and how I journal. So I use Newton, which I found very, very good and simple way of using a journal. Okay. So what I want to do is I just wanted to go over how I'm journaling and what I'm doing. So as you can see here, this is the basic template that I'm using. So it's I put the October, which is the month, and then I'll put in the total number of trades, wins, losses, profit, losses. So these ones you will alter as it goes through the month. Then you will have the date, the pair you're using, profit or loss for that. Then I like to put emotions in here, as every trade, every person has different emotions, and you can write down how you felt about the trade. Was you happy with it? Was you not happy with it? Was you not sure? And it's good to write these down, because then when you look back, you'll find out what your emotions were before you took the trade. Okay. Now, as I come down, I've got a tick list here, and I tick off what I want, my tick list is. So train change, I like to see impulse, bunker bomb, once the high or low breaks, manage above the high or low. Then I'll have a trade, which I'll put a picture of the trade in. And then you can write down here anything you want comment-wise about the trade. And then I'll put in my forecast. Okay, so what I want to do, guys, is I just want to show you how to set up the template, and maybe you can do it the same way because it's very simple. So if you click on here, click on the plus sign, it will give you a brand new page. Okay, and what I'll do is I'll just show you how the template is. Okay, and then we can fill it out after. So to start with, you want to put in the title. Okay, and the title will be the month, so it will be October. Okay, then we just push return and return again. Okay, now we want to put in what we want at the top of the page, which would be wins. Okay, so how many wins we took that month, how many losses. Then we want to put in profit profits slash losses. Yeah, you put that in, and then that will give you your total. Also, one more I forgot at the top will be total trades. That will be the total number of trades you take. Then you put in how many wins you had, how many losses you had, and then your profit and losses. So what your total is for the month. Okay. And then what I like to do is that will be the main section at the top. Okay, that will be our top section, which will be changing through the month. And then we go on to the trades. Okay, so what I like to put in first is the date. So that will be the date of the trade you're taking. Then this will be the first trade, so I'll put number 1. And then as we come down, I put profit slash loss. Okay, and this will be where you put in whether you had a profit or a loss and what your percentage is. And then after this one is very important. I like to put in emotions. Okay, and emotions is very important because when you're looking at emotions, we want to know that whether you're getting in or out of the trades, how you're feeling. Okay, I have covered this before, saying about it's very important to write down how you're feeling when you're doing trades. Okay, so this is the way you set that up. Then what I like to do is I like to set up a tick chart. And if you click on this little plus sign here, you can go down to all these different lists of things, right? If you click on to-do list, which is a tick chart, then I like to put in what I'm looking for, okay, before I take the trade. So I'm looking at trend slash trend change. Okay, just push return, it'll take you to the next one. We're looking for impulses. Okay, next one, bunker bomb. Because obviously we'll have other strategies we'll be trading. So we'll obviously type in what sort of strategy we're using. Was it a bunker bomb? Was it something else? And then I like to put in once we break high or low, manage above manage above recent high / low. Okay, and that will be that one done. And that will be just our tick chart. So what we'll do is we'll just tick them off. Is it a trend? Is it an impulse? Is it bunker bomb? And so forth. Okay. And then what we can put in is trade. Okay. And then what we'll do is we'll put a picture in of a trade, and then we can put in forecast. Okay. Now you can call this what you want, okay, because this could actually be a template. So you could rename that as template. Okay. And then what you can do is you can just keep that as your template, okay, and then you can just copy and paste bits in when you need them. For example, I will show you the one that I've done in October. So as you can see, I put my profit, my loss in, my date, and this one is obviously a trade I've taken, which was the last trade. And then what I'll do is I'll show you how I put all this stuff in. If I delete that. So all of this you've seen me do, you just tick it off. But when you want to put a chart in, what we do is we tick a plus sign here. And as we go down, we can keep scrolling down until we find something called images. Click on images, choose file, and it will take you to your documents file. So I will put in the trade that I've taken, and that will pop up on here. And underneath that, we can then write anything we want. If we wanted to write anything underneath about the trade, how it went, how we felt, or anything like that. And then what I do is I like to put in my forecasts. So obviously everyone will have multiple forecasts that we've done over the weekend. And then we will just go to images again, choose the right forecast, because hopefully you'll have 4 or 5 forecasts, choose the forecasted image, and then I will put it in. Okay, so that will be me set up, and I'll also comment under the forecasts saying what I forecasted and how it worked out. And as you can see, this then is our basic journal. So after that, what we can also add is we can also add our template again. So as we've come down, if we come up here, we come down to the next part, okay? And now we've got to think about what we want to do again for our next trade. So what I do, because I'm lazy, so I like to come down here, and what I'll do is I will just copy this. Where is it? So from forecast, I'll copy the date, okay? And then what I'll do is I'll go back here, go down, oops, and then I'll push, oops, I pushed the wrong button, sorry. So I'll go back down to here, and I will copy this, okay? Go to October, which is our month, go back down, and then just copy that in, okay? This makes life a bit easier because then you've got it all set up again for your next trade. Obviously, you'd have to change that too. And then you just type in and fill out everything. Everything is already set up for you, okay? And then you just keep doing this all month. The only thing that you have to do is you'd have to go to the top, okay? And you'll alter here, okay? So you'll alter the trade. So if you take another trade, you'll put in 2, and then you might have another win, you put in 2. It might be of, I don't know, 5%. So then you'll change that to 5.6%. And this is the only section you'll be changing. Everything else you will just be adding, okay? So if we go back to the template, when you go up to the top, you can also add a cover. If you want to make it look nice, you can put anything you want in there. You can add images, you can type, you can just push on any of these colors, and you can just make it look a bit more fancy. So guys, this is how I'm setting up my journals.
I try to keep it as simple as possible because when I first started journaling, I was writing so much stuff. And when you go back, you don't really need a lot of the stuff that you've written. So the main thing you need is to profit and loss. I have a tick, as you see here, I have a tick chart. All you do is every time you do it, you just tick it off. Okay. And it shows you that you've basically followed your rules. So you can have any of your rules here to tick off. And then I just put in all of the stuff that I've just shown you guys and how to do it. And then what I do over the weekend, when I have some time, maybe on a Saturday or a Sunday, I will then review these trades and I'll review my emotions. And you'll tend to find that the more and more you get used to the strategy, your emotions will change. And it's very good to look back. Like what I like to do is over the course of a month, I'll go back to the beginning of the month and you'll tend to find that how your emotions change as you grow with the strategy. So emotionally, you'll start becoming less emotional and you have a lot more confidence. So it's very good to look back and see, because this is where you see progression, because progression is very hard to see. Okay. Obviously we see the percentage, but obviously you want to see that you're actually getting better and better. And by journaling, you can do this. Okay, guys, I hope I've covered most of it. Hope you all have a great week. Joshua Bunker here.
6.53% profit. Hi guys, how are we doing? How's everyone going? Hope you're having a great day. So guys, I just wanted to share a little tip that I like to do. And actually it's very, very interesting because what you end up doing, okay, is that you're just looking at raw price action, okay? You're not looking at anything else. And I like to do this because you tend to find that you see and recognize a lot more with a plain chart, okay? So what I'm going to do is I'm just going to briefly go over a few weeks of the trading and show you what I do just for a bit of fun. And I find it really helps me narrow down what I'm looking for in the market. Okay. So what I'll do is I'm going to have a blank chart. I'm going to replay it and show you what I'm looking at in price action. Okay. And then hopefully you guys do the same. And the more and more you practice this, the better you're going to get. All right. So as you can see here, guys, price has gone up. Okay, it's broken up pretty impulsively. Okay, it's giving us a little break. So I expect it at the minute to continue. Okay, so what we're seeing here, guys, is this candles are becoming a little bit smaller. Okay, so are we going to have an ascending channel, which will tell us that the market will reverse? Okay, and as you can see here, for me, it's gone up, broke that low, come back down, broke this high. Okay, now will this give me a retrace candle? Because if it does, then it's telling me clearly that we are ascending and that we're likely to drop out. Okay, so let's have a look at that, guys. See what happens next. Retrace candle. Okay, so I'm pretty sure that the market will start dropping. Okay, which it has. But what are you seeing here, guys? That's a telltale sign. Okay, even though we knew it was going to drop there, now I'm seeing these wicks here. Okay, becoming descending, which I can see on the hourly because I've studied the charts. But these large wicks here are telling me that price is also not willing to go down just yet and that it can go back up. Okay, so we will wait and see what happens, but I'm pretty sure it will drop back up. Okay, pop back up. Okay, and there it is, popping back up. Again, what are we doing? We've got this pop up. We saw these large wicks, and I wouldn't be surprised whether it goes up. Okay, but how are we going up, guys? Okay, straight away, what we want to see is when we see candles and wicks that come down like this, we want to see some sort of momentum to go upwards, showing us that this trend here is continuing. Okay, but are we seeing that? No. Okay, because once we broke up, come back down, it's just sort of ranged. Okay, now again, we've just broken these highs, broken these highs. Now, is this going to retrace? Let's have a look. Yes, it's showing us that momentum is not fantastic to the upside and that we can expect price to drop down. Okay. Now you can see again in price action, it's very range bound, wicks on each side, but we've taken out this high here and we've retraced. So I wouldn't be surprised whether we drop down. And there you go, starting to drop down. Okay, we've seen this large wick, gives us a warning sign before that candle came out that it's likely to pop back up a little bit. Okay. And there you go, price has continued down. Okay, but what's happened again, guys, like I keep telling you, it's broken this low, it's retraced. Okay, it's showing us that it doesn't really have any momentum to the downside. Okay, so it quite easily could pop back up just like it did there. Okay, now again, we're breaking these highs, showing us a candle. Even when we got to these major highs here, there isn't too much momentum. So again, if I see a retrace candle here, I wouldn't be surprised whether this just drops out. Okay, and you can see now that price is just showing a range. Okay, what I would like to see next would be either we impulse upwards or we just take out this high and retrace. Okay, so as you can see, we took out that high, retraced. What's that showing us? It's showing us that the market is ascending and likely to drop out than is to go up. Okay, now we can tell this just by pure price action. Okay, and again, it's just taking out that high and retraced. It's telling us that it wants to drop. Okay, now
just by this is why this exercise is so great, because actually we have a strategy, okay? But if you start to learn to just read price action, then obviously when you're learning to take trades, you will see whether the market is ranging, whether it's ascending, descending. And that's why I keep telling you that the market is great when you have an ascending or descending channel. Okay, because when you have an ascending or descending channel, it's showing you that momentum is being reduced. Okay, that the momentum can't continue in that direction. Like here, it looks like it's popping up quite heavily, but what's happened every time we broke a high, retraced, broke a high, retraced? It's showing us that momentum can't continue in that direction and that it's going to drop down. Okay, and there you go. You can see the market starts to push down now. Big warning sign that I have here again is that even though we've pushed down, we've got these large wicks. Okay, so these are just areas that we've got to look at and say, okay, now I've got these large wicks. Is price going to break that impulsively, or is it going to start going back up because we've got these large wicks? Okay, and this is what the large wicks give us. It gives us a range within. So I wouldn't be surprised with this large wicks. We have a little range and then we drop. Okay, I wouldn't be surprised at all. Okay, and there's the little range and there's the drop. Okay, now again, as we've dropped, broke this low, we've retraced. We broke this low. What's going to happen next? Are we going to retrace or are we going to continue down? Okay, we've continued down. That's perfectly fine. Now, how are we going to be able to recognize when we're losing momentum at the bottom? Well, first thing is that this has come down and we've got these little candles. Okay, now what I would like to see is it's a drop and retrace. Okay, or it might pull back up and then drop. So let's have a look. Okay, so there you go. We've dropped back down. What's the next candle going to show us? Is it going to show us a retrace? If it does that, then it shows us that we are creating this descending nature and more likely to go up than down. Okay, retrace. Okay, now just because we've got a retrace here, it doesn't mean it has to go up straight away. It could drop back down and retrace. Like I say in my videos, it could just come back down, retrace, come back down, retrace, come back down, and then shoot up. Okay, because of descending nature, we don't know when that wants to stop until it breaks the most recent high. Okay, so we can keep going. As you can see here, slightly broke that, but again, are we going to get a retrace? Which we have. So it's showing us again, guys, that the momentum is not in the market. Okay, and again, we broke this low, got this large wick here, showing us that momentum is still descending and wants to go up. Okay, so I wouldn't be surprised anytime soon if the market pops up. And there you go, market's popped up. But what's happened straight after? This is the thing, guys. Just because the market has shown us it's descending, okay, we also have to look at price action once it breaks the most recent high. Okay, now it's broke this most recent high, but it's retraced straight away. Okay, what is that telling us? It's telling us that this has no momentum to the upside. Even though we had a clue that it wants to go up, then when it's gone up, it's shown us that it wants to go down. Okay, so I wouldn't be now surprised because we've got these large wicks, broke the high and retrace, whether this goes down. Okay, and you can see there, just drop down. Okay, now guys, this is just a quick video I wanted to show you. It's an exercise that I love doing. I find it so much fun, and also I think you will learn massively from it. So guys, please have a go at it. Okay, it doesn't come overnight, but the more and more you practice like this, I'm telling you now, it will pay you in dividends. It will pay you massively with your trading. Okay guys, just something I wanted to share, just a little quick tip that I love doing, and I hope you all enjoy it. Hi everyone, and welcome back to my Telegram channel. This is Joshua Bunker from JB Trading, and I'm so happy that I've had so much interest on this VIP group, because it really shows that you guys are very committed and really want to be successful at trading. So I wanted to quickly run through some psychology, and I just wanted to give an example, because what a lot of people don't realize is that trading is a skill. It's probably one of the hardest skills in the world to master, because a lot of the time when you're going through a rough patch, a bad part, and you go speak to someone about it, there's not very many people that are supportive. For example, your wife, your husband, your family, your friends, because they're not on the same journey. So what you have to remember is it's one of the most lonely skills, and it's very hard to keep yourself motivated sometimes. So I just wanted to just go over this example of a car and driving. I've said it a few times before, but I really want to hammer this home with people and really show you that actually trading is a skill. Like any other skill, an athlete, driving a car, Formula One drivers, any sort of skill, it takes time to perfect and to master. And the ones that are very good at this are the ones that take the time and actually put in the effort day in, day night, and master the skill, right? So what I want to say about the driving is, if you think about a car, right, and you're learning to drive. So a lot of you would probably remember when you first started to learn to drive. So say you got 10, 15 books and you actually read all the books, took notes, wrote down everything you can. You think to yourself, all right, I've read 10 books. I must be good at trading now. I mean, not trading, must be good at driving now because I've read all the books. So what happens? You buy a car, start the engine up, you jump in, and what happens? You forget everything you've learned. And the reason you forget everything you've learned is because it all happens at the same time. You go in and you have to remember so much. So for example, you have to remember to change gears. You have to remember how to change gears. You have to remember the clutch control, the mirrors. You have to remember to keep up to the right speed. You have to remember so many things that it all comes to you at once and your mind goes blank. And this example I like a lot because it's very similar to trading. Unless you've built up enough experience, the same thing will happen. I can easily say to you right now, trade this pattern. And once you trade this pattern 10 times, 8 times out of 10 is going to win, right? And you might believe me or you might not believe me. But once you start taking a couple of losses, you'll think to yourself, well, actually, is it going to work out? Is this the right strategy, or do I need to change the strategy? And to be honest, this is the main reason that a lot of professional traders backtest. They backtest something that someone has told them. So for example, I want you guys here in this VIP channel to really put the effort in, really hammer this home. And the way you can do that is by speeding up your process by backtesting. Because like with a car, the more and more you drive it, the more it becomes second nature. It's the same with backtesting. With backtesting, you can speed up the experience process, because what you're doing is you're going through the chart, candle by candle, going forward, and you're learning from your mistakes. So you might see the setup that I've given you, and you might see it and say, well, actually, when the chart looks like this, it works out better. Or when the chart looks like this, it doesn't work out better. So then you're creating your own experience on that pair, on that chart. You might say, well, hold on, if I'd have put my stops a bit further away, I would have had less losses. Or if I'd have put my stops a bit closer, I would have got more percentage. So all of these sort of things you're building up the experience, so that when you do jump on the trade, it becomes second nature. You see a setup, you jump on the setup, and what happens? You take it without fear, because you know that over the past year, you've backtested that 8 times out of 10, it works out. And it works out because you know exactly the stop placement and exactly what that setup should look like. So that's one thing I would love you guys to do, is to really, really, if I show you something here, I want you to do the work and actually test it out for yourself. Because like in a car, you can get Lewis Hamilton, who is the most amazing Formula One driver in the world, or one of them, and he could take you around the track 10, 15, 20 times. Then he tells you, okay, mate, you jump in the driver's seat, I'll sit next to you. Do you think you can go around that track like he does? No. And why is that? The reason that is because he has built up experience. He has built up knowing when to brake, when to accelerate, when to turn at certain speeds, what speeds. All of these things he's built up over time, because he's probably been around that track hundreds of thousands of times, right? So it's the same thing that I want you guys to do. I can show you as many times how I'm entering a trade, how I'm taking profit from a trade. But unless you've done it yourself and backtested it and seen it, then you're going to have the experience to actually go forward and make the profit and get into that trade and say, well, actually, I know that this trade, even if it doesn't work out, that's fine, because I know that through my back testing for the last year, 7, 8 times out of 10, it works out. And when it does work out, it gives me huge percentage, right? Another thing with psychology is a lot of people are worried about losing. With this strategy, you don't need to worry about losing. So our losses, we cap them at 1%, right? Now, when you win, your winners just go, right? The winners, you just follow the market and let it go. And the example I put up on the channel, I think it was the first video I'd done, that you could see that there was 36% that you made, right? Just following the market and scaling in. Okay, so if you start taking 1 or 2 or 3 losses, that's 3%. Do you think that psychologically you're going to care, knowing, because you've back tested, that you know that around the corner you could make 10, 15, 20, 30%? So this is what I want you guys to really think about, is that if you're serious about this, I really want you to take it seriously and really do your homework, because that's the only way you're going to get better. You can sit there and say to me that, oh, I back tested a year's worth of data, but I won't be there when you hit the trade. I won't be there when you're all of a sudden going into a negative and you're thinking, oh my God, is this the right setup? Well, you shouldn't think like that, because you'd have done your homework and you'd know that that is the right setup. So just a quick one there, guys, on psychology. And again, this is Joshua Bunker from JB Trading, and I will see you soon. So how can we take advantage of scaling in the guerrilla strategy? Well, if you think about it, guys, you should know by now that in the guerrilla strategy, we trade with the trend. Okay. Now, this gives us a massive advantage over most of the Forex courses out there, because the majority of the Forex courses out there, they will either be counter trend or they will use multiple indicators, which will restrict them from taking the most out of the market. Now, the great thing about our strategy and the way that we've designed it is that we trade with the trend. Okay, so we want to take advantage of the trend, which allows us to minimize our risk and maximize our potential of profit. Okay, now because that we trade with the trend, we are letting the market show its hand. What I mean by that is if the market wants to continue trending, then we will always be in that market. But if the market also wants to change trend, we will also know when that happens and we'll get out of the market. Okay, so why do we want to scale in? Well, one of the main benefits from scaling into a position is you double the amount of profit you make with the same amount of risk. Now, what do I mean by that? What I mean by that is if you're in one position, for example, and you're going with the trend, okay, now you've taken the risk off the table, okay, you've broken the most recent high or low, you've taken the risk off the table. Now, that first position is risk free, okay, and the trend continues. Now, as the trend continues, you get another one of our signals to get involved. Okay, so you get one of our setups and it tells you that it wants to get in again. Now, we like to take advantage of as much of the trend as we can. So as long as your first position is risk free, then we always recommend to scale in. Okay, because we want to trade with the trend. And if the trend continues, obviously it's going to help you and benefit you to take more profit. Now, the advantages of scaling in is that once your first position is above break even, okay, so you're at break even or a bit of profit, then we are happy for you to scale in, because then at that scale in point, you only have 1% risk, but you have 2 trades running, which means the maximum you can lose on that trade is 1%. But actually, it benefits you when you're going into profit, because your profits are times by 2. So where you would only normally have one position and every pip is worth 1, okay, now every pip is worth 2. So you're doubling your profit every pip you move, okay? And obviously, the more you scale in, the more profit you scale up. So for example, if you have 3 positions now, you then times your profit by 3, but you still have only 1% risk because your first 2 trades are above break even. Okay, so this is how it becomes really powerful, because what you're doing is you're compounding your profits, but yet not adding any extra risk to your account. Okay, so let me quickly show you on a drawing what I mean by this. So if you look here and you see a trend, okay, you get a nice pushback, you come down, okay, price comes down, gives you another pushback, okay, price will come down again, give you another one, okay. Now, if you look at this, this is how a trend works, okay. You get an impulse, you get a continuation pattern, you get another impulse, we get a continuation pattern, you get another impulse, and another continuation pattern, okay. This is a trend, okay. Now, how do we take advantage of this trend and make the most profit we can with very little risk on the table? Okay, that's what our goal is. Our goal is to minimize risk and maximize our potential of profit. Okay, so say for example, we get into this position. Okay, we see here it's broken the high, we get in on the bunker bomb. Okay, now we could have got in on the bullet depending on what price action was, but it could have been the bomb or the bullet. Regardless, it makes no difference. Okay, so we're in this position now. Once we break this most recent low here, price comes down, we move our stops from here to here. Okay, so you would either be at break even or just have a little bit of risk. Then as we come down, make this little high, we break that low. Okay, so now we have reduced our risk, okay, because our profits are now below break even. okay? Because this would be the break-even point. You would now have it above this little high, which means you have no risk on the table, okay? Now the trend continues down and you get another scale in, okay, which is here, excuse me. So you scale into this position, which is another bunker bomb, okay? Now at this point, you have this trade that is already in profit, okay? Now we are happy to get in on the scale in because we expect price to continue, okay? So at this point, you'll have your stops above here, you will have a 1% risk, but you will have 2 trades running, which means every time we move down, you times your profit by 2, yet you've only got the 1% of risk. Okay, so as we break these lows here, now you have 2 positions, okay, that have now moved their stops. So you've got one that is in profit here, and you've got the other one that is either at break even or better. Okay, now as we've come down again, the trend continues. Okay, we get this little high and then a break again, which means now we move all of our stops here. So these 2 positions now are in profit. Okay, so at this point, we've had this impulse and we've got both of our positions in profit. Okay, now we look to scale in again. Okay, again, we get our position here and we scale in. Now at this point, we have a risk here of 1%. Okay, and we have 2 trades that have 0% risk. Actually, both of them are in profit. Okay, so say for example, our stops are here above the high. So now as this comes up, okay, you can see we get into this position. We have our stops above here. Okay, we have our other 2 stops above here, and you can see we break this low again. Okay, now as this position is opened, we have 3 times the amount of profit when we go down. Okay, so as it's dropping, we have 3 times the amount of profit, yet only 1% of risk. And actually, we would have been in quite a bit of profit because these 2 would have already been locked down. Okay, so now the benefits are you are trading with the trend, you are adding to a position which is not adding any risk to your account except that 1% originally, but every time you become risk-free, then you are adding multiple scale-ins to your account. Okay, so at this point now, when we break this low here, you then have 3 positions, okay, which means you get 3 times the amount of profit. Now, example from that would be, say, for example, we got in this original position here, okay, and to get down to here, just say, for example, it was 5%. Yeah, so that one position, you would have gained 5%. But because you scaled in, you've also added a position here to here, which would be another 4%, for example. Okay, so now you've added 2 positions and you've gained 9%, okay, rather than just the original 5. Okay, then you've scaled in again here, okay, and you've taken profit here, just for an example. And this one, for example, might be 2%. Okay, so now you've made 11% rather than just 5%, just because you scaled into the position. Okay, so I hope that clears that up and you can clearly understand why we scale into the trend and why it is so powerful. Okay, so now what I'm going to do is I'm going to jump on to some charts and show you what I'm looking at. All right, guys, so let's dig in. So first thing I see here on price action is that we can see that we've had this large wick here and that price generally ranges within inside that. Okay, then we've broken this low here, okay, because we've had this low and a high break, so the trend would have changed down. Okay, so now what we want to look for is to see what happens in price action. Will we break the high or low impulsively, and then will we get our trade set up? Let's have a look. Right, so as you can see here now, price has broken up impulsively. Okay, so we want to see what happens next, whether we'll get a continuation, which will be another blue candle, or because we've just broken this high, whether we will get a red candle, which will show us that we are ascending. Okay, so we've had this red candle now. So this shows me that we are becoming ascending and that we're more likely to go down than we are up. Okay, so I won't be looking to buy. All I'll be looking to do is to get in on a sell position. Okay, So let's have a look at what happens next, unless we get a nice impulsive move up. Okay, so you can see that now it was a counter trend move. It's gone up, so that would be the high and low. Okay, so let's go forward and see what happens. Okay, so as you can see here now, we've impulsively broke the low. Okay, now what are we looking for? What is our trade setup? Okay, we have two trade setups. One is the bomb, one is the bullet. Okay, now what is the highest probability out of all of them together? Okay, because I've said to you, I like trading both of them. Okay, and if I get one before the other, it gives us higher confidence. So for example, if this is the bomb, okay, but it hits this area before we get a retrace, then I want to get involved here because it's a lot more higher probability that we're going to reject. Okay, now why is that higher probability? It's higher probability because we have this ascending channel which tells us that it wants to drop. Now price has broke through the most recent low and then it pulls back to that level almost most of the time, and when it does, we get a clean rejection. Near enough bounces straight off of this position. Now we normally put our position a little bit lower so we account for spread. Otherwise, sometimes we don't get triggered in, but that will be the highest probability. But if it doesn't quite get there and I just get a bomb, then I'll enter in on the bomb. Okay, so these are the things that we'll be looking for. Let's see what happens next. Obviously, I need to move this down. Okay, let's put this magnet on. And then this would have been the most recent high, okay, because we broke that low. So we're just now going to continue down and look for our trade setup. Right, now we can see here a counter trend move, okay, but what we need to do is to make a low and then a high break, or we need to continue slightly further up. So let's see what happens. Okay, so as you can see now, at this place, at this position where we're at, we're either going to do one of two things. We're either going to break this low and retrace, showing us it's descending, or we're going to take out this high, okay, and then we're looking for a pullback and we'll get involved because that is our signal. Okay, so this will be a little high here. We'll be looking for price to either come down, break the lows, or we expect to come up and then come down. And if it does that, that will be our position. Sorry, I've got a magnet on still. So that will be the position here, two highs, two lows, and we will look to get in on the bunker bomb. Okay, so let's see what happens. We obviously have this in mind. We forecasted it beforehand. We'll see what happens next. So as you can see, it's taken out the high rather than the low, which means it's counter trend, and we are looking to get into a position if we get one red candle. Okay, so you can see it's pushed back up a little bit more, but it's still part of our trade setup. Okay, so I'm looking for a red candle and then I'll be getting involved. So there we go. We got the red candle now. So we will be setting our position up. Okay, now when I get in on the bomb, I generally on this pair have a 15 pip stop. But if I get in on the bullet, it's generally around 10 pips. Okay, now everyone could be different. Everyone has different risk appreciation. Everyone back tests and has different levels of risk. Some people might want to put a 20 pip stop. At the end of the day, it's all down to your own personal back testing and what you feel comfortable with. Okay, so now what am I looking at next? I'm looking at this low here to be taken out. That will allow me to minimize my risk. Once I've minimized my risk, and if it's below break even, I'll be looking to scale in. So break even or above profit. Okay, let's play on. As you can see, very close to the bottom there. And there we have it. So price has now broken this low. Okay, so now the most recent high would be here. Okay, or actually it will be here. And then what we would look for is to see what our risk would be. So our risk was at 15 pips and now it's reduced to 3 pips. Okay, so it just goes to show you minimize your risk. Okay, and that's what's great about this strategy. Every time we break a high or low, we minimize our risk, and the potential is a lot better because you minimize your risk, you maximize potential. So let's go forward and see what happens next. Okay, and as you can see here, guys, what's happened now is that we've taken out the next low. Okay, sorry, it should have been here. So it's taken out the low, yeah, and now we've managed to get our position to around break even. Okay, so you can see that this is the most recent high, which is on the break-even point. So for me, now I am risk-free. Okay, so once we are risk-free, we know that we are looking for positions to scale in. Okay, and this is what we want to do, guys. We are trend traders. Okay, we have the knowledge that we have become ascending and that we expect price to drop down. Okay, so it's come down, it's given us a continuation pattern. We expect it to continue, and then we expect it to give us another scale in, and we just keep scaling in with our positions until the market turns around from a trend. Okay, so let's do that. Okay, so you can see now. Okay, so you can see the market has impulsed down. Okay, so we move this down to our lows, but our highs stay at the same place. Okay, we're still at break even, and we will not be looking to get involved unless we we do look to get involved if we get our position, but we don't want to, for example, move our high here or our profit until we get a nice push of the high or low. Okay, so for example, I will not be moving this from break even until we have a position like this. Okay, and then what I'll do is I will move this down once this low here has been broken. Okay, so the first position at the moment is still at break even, and I will not be moving that until I get a high and a low. Okay, so let's continue. As you can see now, I've had this break here. Let's continue down. Okay, and one thing I would say is strikes me straight away is we get this large wick. Now, what does a large wick mean? Well, a large wick just means that we have a warning sign, and that majority of the time what I've noticed is, especially if we're with a trend, is that price action likes to range within here. Okay, so it either likes to range for a while or it will give you a bigger continuation pattern. Okay, now it gives you a bigger one because we can see here that the market has become exhausted and it needs to pull back a bit bigger than usual. Okay, so that's something you need to bear in mind when you're trading this. Another key factor that I always account for when I'm trading and back testing is I always look for spread hour. Okay, so are we in 9 to 11? Because that's a key component. Okay, because we don't normally trade them hours, so why would we when we're back testing? Okay, so as you can see here now, price has come up. Okay, we've made this high, it's pulled back, and we would look to see if we could get involved if the position breaks this high. Okay, now the position has broken that high, and we will look to the next candle for a retrace. Okay, and as you can see, it's still going up. Next candle, if it retraces, then we would like to get in, but I can see here that this is 9 o'clock, which is an hour where it is spread hour, and I will not be getting involved. Okay, now what have I told you guys what I do? What I do is I generally wait for the high to be broken again and then retrace. Okay, because I know that if I get in here, the spreads could largen and take me out. Okay, so what I now would wait for is for the break of that high and then a retrace, and that's when I'll get into the position. Okay, I've said this multiple times to you guys. Hopefully by now you can see that. Okay, so what I'll look at next is what happens. Okay, so price has pulled back down, and again, if it goes down without me, that's completely fine. I understand that because sometimes this is the setup. Okay, this is the bunker bomb. Okay, it's just because it's spread out, I didn't take it. That doesn't mean it's going to go back up just because that's what I say I'm going to get in. It could just continue down and not take me in. Okay, so I'm prepared for that, and I'm happy if that happens. Okay, so as you can see now, it has taken out the high, and there's our red candle. So I would now be in this position, okay, and I will be scaling in. Why would I be scaling in? Because my first position is at break even or better, okay? So now I have only 1% risk on the table. Now, this is where the power of scaling in comes in, because the first position now, okay, it is running currently at around, I don't know, 3% there. Okay, now the power comes where I have no risk on this first trade. Okay, I only have 1% risk, but every time the price moves down, we are doubling our profits. Okay. And this really can really compound quite quickly. Okay. So let's see what happens. What I want to do now is I want price to come and break this low and then hopefully take this one below break even and then follow the trend down and hopefully get another scaling. Okay. So as you can see, price is moving back up. Okay. And this is what I was saying about these large wicks. You can see that it's given us a larger correction, a larger continuation pattern, and that's generally what happens with these large wicks. Okay, you will generally get a larger correction, or you'll get a larger range. Okay, so let's continue down. Okay, so now you can see that we've broken this low. So what I'll do is I'll look back at the most recent high, which is here. Okay, that's the most recent high, which means that now both positions will be better than break even. Okay, this position will be here. So the first position will be locked in at 3.2%, and the second position will be 0.3%. Okay, and then what we're doing, guys, again, you can see each time it's moving now, we are moving times 2. Okay, so every time that we're going down per pip, we are timesing 2 every single time. Okay, so where originally I would have been at only 4.5%, but actually with both of these trades, I'm now at around 6%. Okay, so it just shows you the compounding interest on that, how it compounds so quickly. And what I'll do now is I'll just continue and show you how I'm trading this. So as you can see now, we are having a counter trend move. Okay, now we would look to see if we can get involved in a scaling here. Okay, if we can, that would be great. If we can't, then we can't. Okay, the only thing I would say is it's broken that low and it's retraced. So it's not the best setup. But again, if we get up to this little, this is a little, as we start the trend, as we break this low, we go backwards. And you can see we have this little correction here. If we come back to here, we'll get the bullet. So I'll mark that out. And if we can get in there, we'll scale into that. Okay. And as you can see, that didn't happen. So the trend has just continued. So what I'm looking to do now, I'll be moving that as my most recent high. And then we'll be moving both positions down into profit. Okay. And this is it, guys. You can see now we are compounding times 2 every single trade that we're doing. Okay. So let's keep going. And then the market is moving, starting to become counter trend here. Okay. Now we don't move any of our positions yet until we break this low. Okay. But as you can see here, guys, what's happened? We've had a high, we've had a low, we've had a high. And if we get a retrace candle, we want to get involved as long as it's not spread hour. Okay. So now, as you can see, guys, this candle here has completely taken out that low. Okay. So for me personally, I don't want to get involved in that because I would have preferred a smaller candle. That reason, when we take out that low, we minimize our risk. Okay. So if I was to get in here, it's very difficult to minimize my risk. I would have to wait for the next high and low. Okay. The only thing we can do is we can move now this, because that was our low, and then this was our high. And what we can do now is move our positions down. And again, guys, you can see if I was in one position, I'd be on 5.66, but actually I've added another position, which is 2.83. Okay, so you can see the power of using the scaling. Okay, so let's continue down and see what happens. So as you can see, again, guys, price action has shown us this sort of candle that wants to go up, a rejection candle. We got a high, we got a low, we got another break of that high and a retrace. Now, do I want to get involved in this? Not really. Reason being is we just broke this low and we've retraced. Okay. Now you could get in this as a scaling, but me personally, I'm not going to. Okay. So as you can see, it breaks the low again. Okay. So this is the low. It's broken that. So where's the most recent high? So the most recent high now would be here. And then what we do is we just move our positions down. Okay, each one every time, and we scale in. Okay, now this has broken the low, retraced. Again, I don't want to get involved. Just want to manage my trades. So as you can see now, we've broken these lows. Okay, this is the most recent high. Again, we just move our profits down. Okay, and again, this is what happens now. We can see clearly that this is becoming descending, and we expect the market at any point to go up. So we just manage our trades. We don't scale into any positions. Okay, so let's continue. And as you can see now, price would have taken us out. Okay, so this is the positions we're in. This is the scaling we took. Okay, so let's just move that over so I can show you. And you can see now, guys. Okay, so you can see now, guys, this is where we got taken out. We saw the descending nature. It's taken us out. So now if we were in only one position, okay, the position would have been 6.46%, which is great. Okay, but because we scaled in, okay, with no added risk, we also added another 3.6% to that trade. Okay, so both trades would be well over 10%. Okay, and as you can see, the payout power of scaling in. Okay, guys, so this is what we look for and how we scale in on the Guerrilla Trading strategy. So I hope you all have a great week. Once we have an impulse, why is what happens after that important to us? Because, guys, we are looking for a counter trend move to have a continuation pattern so we continue with the trend. Okay, now what we look for is the bunker bomb, which is a continuation pattern, and we've refined it. Okay, we've just refined our entry on a continuation pattern. Okay, so that's what we're looking for. We're looking for a counter trend move. And what also can happen is after we've had an impulse, we have momentum slow down. Okay, and we recognize that by looking for how we are breaking the lows and highs. Okay, is it becoming ascending or descending at that point? Because if you look at the chart here, our setup is a counter trend move, okay, that continues down. Okay, so we know that we had the continuation pattern here. Okay, we've had our refinement, which is the bunker bomb, which continues down. That will continue with the momentum. Okay, but what signs do we have that we look at in the market that will tell us whether this momentum is slowing down? And that's if we get a descending nature. Okay, because if we get a descending nature at the end of momentum, we know that the market is likely to go up than to continue downwards. And these are key components that we have to look at in the market for refinement, okay? Because if we get a descending nature at the end of a big impulse, then we don't want to get involved in that market because we know that it's more likely to go up than it is down. Okay, so all I'm going to do now is go through the charts and show you what I'm looking at. Okay, so as you can see here now, guys, we had this counter trend move. Okay, so what we're looking to get is to get a nice counter trend move to continue downwards. Okay. Okay, so as you can see here, guys, the market has come down as an impulse. Okay, we've had a slight pullback or a counter trend move, and then we've taken out the most recent low here and we've retraced straight away. Now, what is that showing us? Well, that's showing us that the market is becoming, the market is becoming descending. Okay, and that it's more likely to go up than it is down. So how do we recognize that? Well, we recognize that by the way that we took out this most recent low and that we've pulled back. Okay, that's showing us that the market has lost momentum. So the momentum has come down. We expected a continuation pattern, which we didn't get. Instead, we got a break of the low, which we expect a continuation to come all the way down. Okay, so when we break the low, we expect the momentum to continue. But instead of continuing, it's pulled back up and given us a candle that has showed us that we want to go back up because it's come down, broke the low and retraced. Okay, so it's showing us that we have this descending nature and that we're more likely to go up than we are down. Okay, and if we have that sort of a market, we do not want to get involved. Okay, so if we move our stops now, as this broke the low here, okay, we would have had our alerts trigger, okay, and we would have moved our highs to here because that is the most recent high once this broke, okay. Then it's come up and broke the most recent high. So this would be the new high, okay, and this would be the new low. And we'll be looking to go up from now because obviously we had this descending nature and then we broke the trend upwards, okay. So as you can see, the market now has taken out these highs, showing us that this descending nature, when we looked at price action, it gave us a clue that we wanted to go up, and that is what has happened. Okay, and this is the key thing, guys. When you're reading price action, this is how you really get to understand the market. Okay, it keeps you out of being in a bad market, because some people that are looking at this will see this impulse and they would say, oh, this is a continuation pattern to go down. Okay, but because we're looking at price action and we can read the most recent lows and highs and how they are breaking, whether they are descending, ascending, or whether they are counter trend. Okay, so we're looking at one of two things: whether we are counter trend, okay, or whether we are descending or ascending. Okay, they're the key factors we need to keep asking ourselves when we are breaking the highs and the lows. Okay, so as you can see here, guys, we are continuing, and as you can see now, we've had this clear impulse up. Okay, and we would move that here, we'd move our lows here. And then what we're expecting, guys, what are we expecting now we've had this clear impulse? Well, what we're expecting is a nice counter trend move to continue upwards. Okay, that is what we're looking for a continuation pattern. But also we have to be aware that if the market goes up and retraces, goes up and retraces, it's showing us that the market is losing momentum and it's more likely to go down than it is up. Right. So as you can see here, guys, this is still part of the up move, okay? Because we have taken out the most recent high of that candle, okay? So that candle high was taken out by the next candle, showing us that this is still part of the up move, okay? So we haven't had a counter trend move yet unless we have a candle that doesn't take out the next candle's high, okay? And as you can see, this candle has done that. Okay, we haven't taken out that the next candle's high, which means we are now have a counter trend move. Okay, so as we've come down here, you can see we've made this low. We've got a little high here. If we break this low, then obviously it will be a bunker bomb because we'd have the two highs and the two lows, and we'll look to continue upwards. Again, guys, I'm not going to go through trades on this video. I'm just going to show you how we look at what happens after an impulse. Okay. So you can see now we took out this low here. Again, this low or this low is not confirmed until we break out the high. So if this continues down, then we'll have another low. So anyway, the only way that we recognize a low is if we take out the most recent high. Okay, so this low, even though it's pushed back up, wasn't confirmed as a low because we hadn't taken out this high. Then we've come back down again, created a bunker bomb because we've got a low, a high, a low, and a retrace. Okay, so that is our setup. But again, this low, current low at the minute, does not confirm as a low until we take out this high. Okay, as you can see, another low has come. Okay, now this low is still not confirmed until we take out this high. And as you can see now, that high has been taken out. Okay, so that is confirmed as the low. Okay, once we break that high. Okay, but we want to go to the most recent low. As you can see here, that is the most recent low. Okay, and what we want to do now, guys, is look at impulses and how we want to continue with that. Because you can see here, guys, we had a clear descending nature, price went up. We had a clear counter trend move, price continued up. Okay, so these are the things we're looking for. Okay, so as you can see here, guys, as we expected from a counter trend move, that price has now continued upwards. Okay, and as you can see, this would have been the most recent high and low. Now, what are we expecting, guys? We're looking at one of two things, remember. What are they? Well, we're looking whether price is going to be counter trend, or we're looking at whether price is going to break the highs and retrace. Okay, because if it becomes ascending here, we don't want to get involved in that market, because we know that majority of times, and with the experience and probabilities in the market, we know that it is likely to fall out than it is to go up. So we don't want to get involved in that sort of price action. Okay. So as you can see here, guys, price has just continued. We've continued up with the impulse. As you can see, it's a clear impulse. And we're still waiting to see whether we get this counter trend move or not. Okay, you can see here this candle slightly taken out that high, which means it's still part of that move. We are not yet counter trend. Okay, and that one is about the same. So again, that is not counter trend yet. And you can see the candle after has become counter trend because we haven't taken out that high of the next candle. Okay, so what we're looking for, we're looking to see if price can come down, give us a setup and continue upwards, because that is how a trend moves. It goes up, pulls back, up, pulls back, up, pulls back. Okay, now that is what we expect with a trend. We expect the market to go up, pull back, go up, pull back, go up. Now that is a trend, okay? So that's what we want to see in the market. So let's continue. As you can see, market's pulled back. And then you can see we've taken out this high here. So you can see now that the new low would be here. Okay, most recent low. And you can see the market has impulsed yet again. Okay, so because we've had a counter trend move, we've had a continuation pattern and it's gone up. Okay, now I'm not going to go through charts or where we would enter this or not entered it. I'm just looking at clearly at impulses and what we look at after an impulse. So you can see again, we've had an impulse here. What are we expecting? Well, we're expecting a nice counter trend move, okay, to continue. Okay, that's what we'll be looking for, because that is our setup. Okay, but obviously, again, we've got to look at price action, because we want to work out whether it's going to continue or whether momentum is going to slow down. Okay, so here you can see, guys, we've had this counter trend move. So you can see we need to see a nice counter trend move for us to continue. Okay. And what you can see here, guys, is that this candle has taken out the high. Okay, so this is another key factor. Okay, this is a key thing that you need to look at when we're looking at these markets. Okay, is that this candle now has come up and taken out this high here. Okay, you can see it clearly, it's taken it out. If I put that up there, excuse me, you can see that the candle has just taken out that high. Okay, now why is this important to us when we're looking at it? Because at the moment, the impulse has come up, we've had a pullback, but it's just taken out that high. And instead of continuing, because what we expect is the market to break and continue to go upwards. But as you can see here, this market has just clipped the top and retraced, okay? Showing us an early signs that we could be ascending. Okay, and that majority of the times we know if we become ascending that it's likely to drop than it is to go up. Okay, so let's have a look at what happens next. If we get a nice retrace candle, then that will definitely show us that the market is looking to go down than it is up, because obviously we've broken this high and then we would have retraced. Okay, so you can see we've got this clearly candle that's coming downwards. And this, for me, we would obviously see that this would be ascending, okay, and that we would know that price is likely to go down than up, okay. We also have more warning signs because we have these big wicks here, which I will not get involved which I will not speak about in this lesson because I'll go over them in another lesson. But we have a lot of warning signs that this price action doesn't want to continue. The most important one is that the impulse has come up, pulled back, taken out the high, and then retraced. Okay, so we know that price action is likely to fall out here, so we would not be looking to get involved. As you can see, price action is just, we've got these big wicks and we've got this ascending nature. We can see that price is just now reversing down. Okay, wouldn't be surprised if we take the lows out. And as you can see, that's what's clearly happened. Okay, and that's what's a key thing about reading price action and looking at what happens after an impulse. Because we can see here, guys, that we've had a descending nature, it's gone up. We've had a counter trend move, it's gone up. We've had another counter trend move, it's gone up. We've had an ascending channel, it's gone down. Okay, and this is just one part, this is just one real move in the market. But yet we've learned to read when to get into the market and when not to get into the market by looking at how we look at what happens after an impulse. Wicks, and what do they tell us about price action? What did you think about wicks, right? Wicks is showing us that price has gone one way and then it goes another way in the same hour, which is telling us that a lot of the time it's giving us a warning sign because we have indecision in the market where one side is really trying to push the market down, then someone else is trying to push it up. And this forms a large wick. And obviously, because we're only focused on mastering one time frame, it's very important to learn each aspect of price action within that time frame. So if I quickly run through here and show you what I mean. So if you can look at this, we've seen a nice impulsive move down, right? It's come down, pulled back, and we've seen a nice push. It's quite impulsive, but what do we know about price action? Well, currently, it's showing us that everything is going downwards. We have a little counter trend move here, but majority of that move is showing us that it's quite impulsive down, right? And then if we look at the very next candle, we get another nice, really large push down. And obviously during the hour, and this is a key thing why we wait for the hourly close, because at one point through that hour, we would have a full red candle, which looks massive, right? That would have been a huge impulse. But then we've had this large wick. And as I've stated many times before, when we have a large wick, generally what happens is price action, okay, will just range within that candle or the wick, okay? It ranges within there before either it continues or it goes up, okay? So we know that as a fact, we can expect it through price action. Now, what else is that wick telling us? Well, it's also telling us that someone's tried to sell quite heavily here. But then we've also had a lot of buyers buying at the same time, which means the momentum's come down, but actually the momentum has shifted to the upside. And what I've noticed over a long time period of back testing and through my experience is generally if we have a move like this, this will sort of be the area where we have the counter trend move, okay? So we might get a bunker bomb, which will continue down, or sometimes we just get a larger range, okay? And then drop, very possible. So let's see what happens next. Well, here you can see we've had a counter trend move because it hasn't broken the low. And then what happens next? You can just see price action then just ranges within inside that wick, okay? So you can see after we formed a wick, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 candles that have ranged within there. So obviously this is a key thing that we need to keep an eye out for when we are trading price action, because it can give us a very good warning sign of when we want to stay in and out of the market, depending on certain pairs. Now, if you look at the CAD pairs, and we know that the CAD pairs are generally very corrective, if we see a large wick, what do we know is going to happen? Well, we're more likely to have a larger range. So that's when we sort of have to do our back testing on each different pair and focus on different parts of price action, depending on that pair. Okay, so here is the US dollar CAD. So just going on from what I last spoke about the CAD pairs. So what we need to be careful of is that we see price action now is on an upwards move, right? We're on an uptrend. And then we can start seeing some price moving. So what I wanted to share with you is to see if we can see any wicks on this pair and show you what sort of characteristics we're looking for. So as you can see straight away with this pair, we have broken the most recent high, okay? Showing us and indicating that we are going up. So the move looks quite impulsive now, but already I'm getting a little bit of a warning sign, which is this wick here. Okay, it's giving me a warning sign that price has tried to go up and someone is selling it. So this is where we have to be in detail with price action and really look at what we're looking at and deciding on what we think is going to happen next. So for me, I'm looking at to see whether, because we've had a large wick, whether we'll get a retrace, okay? And then maybe a pullback up, then a retrace, showing us that we're having an ascending nature. Very, very possible, okay? So these are things I'm looking at, and I'm looking at what will happen next. Because I've had this large wick, especially with the CAD pairs, we generally find it ranges, right? Now, obviously this wick is a wick, but it's not huge. Obviously, the bigger the wick, the more likely we're going to range. So let's see what happens next. Well, as you can see, we have then taken out the next candle's high, which means we're still on that up move. But again, that candle is showing me wicks. Now, what information is that giving me? Well, it's giving me that we've come back, we've broke the high, and it can't be sustained. Again, giving us another warning sign that we could be coming downwards. But again, we want to wait for price action to show us, okay? So still, I would expect here to maybe even have a pullback and then to maybe start ranging before we continue, okay? Just looking at pure price action. Right, so you can see again, this is another warning zone. So we've known this now for the past 3 hours. So every time we've come up, we've seen momentum slow down. It's now broken the high of this candle, and again, giving us a large wick. So what do I expect to happen? Well, now knowing that price action is giving me these large wicks, especially on the CAD pairs, I expect to get a larger sort of range, okay? Before we either continue up or we create a bigger version of itself, so a bigger range, okay? So it's just a very big warning sign, okay? Let's see what happens. So we've had a counter trend move now. It's the first counter trend move. How do I know that? Because this candle didn't take out the previous candle's high. So it means that we are counter to that trend. And as we continue now, as you can see, what do we expect? Well, we expected price to range within here, okay? We expected that. Now, obviously, depending on the pair, because even CAD, generally, sometimes when we get big wicks, we get larger corrections, okay? So like you can see now, it's starting to descend. So in a sense, create a larger range within there. So just because we know that, we knew that prior to this price action, we saw it beginning to become wicky, and then we saw this large wick. So even though we didn't see price action after, it's giving us a lot of information on what we're looking at next, okay? And as you can see, price action has now ranged within there, okay? Now, if we count that and think, well, prior to having this candle, we knew this was going to happen. And as I said to you guys, and you all know through my previous recaps and going through the content, that if I see a large wick, especially on the CAD pairs, it gives me a massive warning sign that I don't want to get involved in, for example, a bunker bomb, right? Because I know with a bunker bomb, you're just going to get tagged in and out, okay? Especially with this pair. What I want to see is pure momentum, no wicks, and then a counter trend move. Okay, now, as I've said prior to this also, is that when we are looking at the bunker bullet, I'm more happy to get involved because, as I've stated many times, if you get involved in a bullet, for example, it's normally at the bottom of a range or the top of a range, depending on which way you're going. So that's another key information there. Now, what happened once we got to that bottom of a range? Well, we've seen a wick here, and then price has gone up. So it's giving us an information just by looking at raw price action, okay? Now, I'm not going to go into trades and cover that sort of thing, but with this sort of pair, we want to see pure momentum. I don't get involved in the bullet on this pair, but I was just giving you a pure example there of price action and why we take certain positions, okay? And as you can see now, we're now broken out the high. But if we go prior to that, the range is this whole bit here. This whole bit of information we already knew at this point, okay? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 22 hours of a range, which we already predicted. Why? Because we saw this price action here, Okay, so that's something to keep an eye on and something to give you a big warning sign. And this is why you have to back test all different pairs, because all different pairs will be different to others. For example, large wicks on other pairs won't be as dominant as large wicks on a CAD pair, because we know the general nature of a CAD pair is corrective. So if it's corrective, if we see large wicks, that's giving me a huge warning sign. I don't want to get involved in that sort of market. Okay, so that's generally what we're looking for on this pair. Now, another area what we can look at, which could really help us with price action, help us not get into some of these lower probability trades, is actually looking at current price action. And if it's too wicky, now you might ask, what do I mean by that? Well, if you look, as prices come up here, we generally see wicks on one side, wicks on the other side, wicks on one side, wicks on the other side, wicks. And when we see a lot of wicks like that, for me, it's giving me a warning sign that price action is just going to move sideways and not really have any momentum to the upside or the downside. Now, if you look at this, as prices started to move down, what are we seeing at the bottom of these candles? We are seeing lots and lots of wicks, okay? And we saw the wick, it's gone up. We saw another wick, it's gone down. Now, what's that telling us? Well, have a look at this, for example. We have a large wick up, and we have a large wick down. So a down wick and an up wick. What's going to happen? We're more likely to range. What has happened? Price action has ranged. So these sort of things we have to be careful of and we have to look at. Because if you look at generally, if I zoom out a little bit, all that's done from this point when we started seeing wicks is just move sideways. Okay, now we know that if we're seeing lots of wicks from the upside and from the downside, that generally there's not going to be a lot of momentum in the market. So why would we want to get involved in any of this? We wouldn't, right? So when we start seeing large wicks on bottoms and tops of candles, that's for me a very big warning sign to stay out of the market. Okay, now if we have a look at this, for example, we had some news over the weekend, and then look at this. Wicks at the bottom, wicks at the top. I'm not getting involved in any of that sort of price action until I see some clear sort of movement. And then what happened? We've then come up, started to create some wicks again, bottom and top, okay? There's no real momentum. And then what happens when we start to see some momentum? Okay, let me just replay this. So let's have a look at this live, okay? So what happens when we start to see a bit of momentum? Well, look at this. This is starting to look like we're seeing momentum. We're going to close that gap, okay? And then what happens? Well, straight away through live price action, I'm going to look at that as a large wick, okay? What's that going to tell me? Well, it's telling me that we're more likely to range, okay? So if I know it's more likely to range, do I want to get involved in a sort of bunker bomb here? That's going to be a continuation pattern of the momentum. Well, no, I'm not, because what's this telling me? This is telling me that momentum is slowing down. So how do I know that price wants to continue up? For all I know, it could drop. Okay, so this is where we have to read price action and be extra cautious when we want to get into the market. So then we look and you can see, okay, I didn't even know what was going to happen next. I know I just put it on bar replay, but I didn't know that this was going to be a red candle, but I knew it because I saw this. I predicted that because I knew exactly what normally happens with price action. And now I've seen two of these, two with large wicks. This is more likely to drop down and create a range. Okay, let's see. Okay, it's dropped down, come back up, right? Now, for example, what's our most important thing? Let me put these on here because I don't want anyone getting confused. Okay, before that would have been the high, that would have been the low. And what's our most important thing? Well, when we're looking, for example, for a bunker bomb, okay, we're looking for momentum to the upside. So we're looking at how the most recent highs are breaking. Now, how's that most recent high broke? It's broke. And what's it formed? It's formed a large wick, right? A large enough wick to tell us that actually the momentum to the upside will not be sustained because we've just broken that high. Yet it's dropped straight back down. So it's telling us that actually the momentum can't be sustained to the upside. Otherwise, we would have just broke straight through it, okay? But we're getting a warning sign, and this wick is a very good warning sign, okay? And as you can see, it's now reversed, which we probably knew was going to happen because we saw the wick,
okay? And this is what's so great about being a price action trader, is that you can read all this stuff in advance, okay? Now, for example, we saw that price action couldn't be sustained to the upside, and what's happened? We've shot down. So in a sense, we knew that was going to happen in advance, so it's given us a warning sign not to buy, right? So let's move this now down, and let's see if we can get some sort of sustainable move to the downside, because obviously it's now just broke through, okay? And then as you can see, price then has just pulled straight back up, okay? Now, if we look at the most recent low, after we broke down here, okay, this would have been the prior low before we broke, okay? Now, as that broke, we've retraced, telling us that momentum can't be sustained to the downside, okay? And then as we broke back up again, okay, we've then taken out this high again, right? You can see that clearly. We've now taken out the high. Now, what have we seen straight away after taking out that high? What do we think might happen? Do we think that it might range? Highly possible. Do we think that it might drop? Very highly possible. If we get a red candle here, then either of those two scenarios can happen. So that's something that we got a warning sign for. There's a red candle. This candle, it didn't break that high, which means it's counter trend. So what we expect is price to come down and then to range within that. And as you can see, that's exactly what it's done. Now, we knew that was going to happen prior to seeing any of this price action. Why? Because price action is generally showing us through wicks and warning signs what's going to happen next, okay? And you generally see more of this when we break a most recent high or low. So as you can see, this broke a high, couldn't be sustained. This broke a low, couldn't be sustained. This then broke that high, couldn't be sustained, okay? What's that telling us? Well, the upside and downside can't be sustained, so we're more likely to create a larger range, okay? And as you can see, we've got this larger range, okay? Now, as you can see, price action has then come back down, broke that low. What's happened straight after we broke that low? Okay, before that, we already had a warning sign. It's coming down, pulling back up. Broke the low, pulling back up. Can't be sustained to the downside. Price action, okay? Then price action has gone down again, okay? Now what's happened? Got a large wick, yet again. What's going to happen here? Is price action going to now start ranging within here? Highly possible, okay? As you can see, price action's pulled back up and it started ranging within here. What's happened again? We've just broken that low yet again, guys. What have we got? A clear warning sign. Now, if you think from this point all the way to here, we wouldn't have got into any trades. Why? Because the market has shown us through wicks and through its price action that we don't want to get involved. Do you think I want to get in shorts here when I can see these large wicks? Do you think I want to get in any of these shorts? No. Do you think I want to get in any of these shorts? No. Do you think I want to get in any of these buys? No. Because the buys are showing you here that there's no momentum to the upside. This is showing me there's no momentum to the downside. And as you can see, we're also forming a descending nature, more likely to go up and down. Now, what can we say about this? Well, this is a large warning sign. What's going to happen? More likely to range or go up, okay? So we know that. So we're not going to be selling, okay? Again, price actions drop down. What are we looking at with price action? What can we see straight away? More wicks. Do you think that the momentum to the downside is showing you that we can go down? Or is it actually showing you the opposite? Are the wicks showing us that we can't be sustained and that we're more likely to go up? Okay? What happens? Price goes up. But how's it going up? Well, it's going up, wicks, wicks. Again, large wicks on either side. Okay, obviously I'm not moving my highs and lows because I'm just trying to explain raw price action. Okay, so don't say to me, oh, you didn't move your highs and lows. That's not the key goal here. The key goal here is to show you. Now look at this, for example. Large wick down, large wick up. So it's gone up, it's pulled back down. It's gone down, pulled back up. What's more likely to happen? Range. Now, you think about it, all of this sort of price action here, we haven't got involved in. Do you think currently I want to get involved in any price action here? No, I don't. Why? Because it's probably going to just come right at the high and range, okay? Or range within here. I already know that looking at price action. What's happened? We've created a larger range. Now, how did I know that? I knew that prior to price action because I've seen it. I've seen it so many times, and this is why I want you guys to really concentrate on wicks. Wicks make a massive difference, and it keeps you out of this crazy sort of ranging area. Okay, guys? So I hope you all understand now about wicks and how we can use them within price action.